We gotta watch out.
Yeah.
All right, everybody knows, let me do this. What's happened with Wall Street, that's kind of a trick that's not helping all of us, okay? It hasn't come down to Main Street yet, but we're all hoping it's not. Right now, we're looking through it, just hoping that it's gonna not affect us. Probably a silly way of looking at it. But the REITs have closed down shop, and that does trickle down. I can tell you, the time to sell, the window of opportunity for this year for any kind of assets, in my opinion, was the first quarter of this year. Why is that? Let's see. REITs had a ton of money. Everybody kind of had, at least the buyers had developed a ton of money. And at that point, 2012 was still fantastic.
Right.
Super rosy. Closer we get to 2012, reality sets in. Where does everybody think 2012 is going to be? Flat. I don't know. Whose prediction earlier was 3.4?
Mike's. Yeah, he's just saying it's going to be reduced. I mean, definitely.
Yeah. You know, all the proponents, STR, HVS, you name them, PKF.
You got some tell appraisals.
They were all at 8, 9%. That's okay. Yes, that's what I meant to say. Everybody was at 8, 9% for 2012 performance. John Richter, where were we for 2012 performance?
We were up there.
Yeah. But that's how we got all the deals done earlier this year. Don't worry about 2011, guys. It's going to be great. But 2012 is going to be fantastic. And the reason they can pay us an 8 cap, it's not because they were satisfied with an 8 cap. Some paid us 7.5 caps. It's not because they were satisfied with 7.5 caps. It's because we sold them a 9 cap in 2012, and everybody bought it. Everybody, yep, super. We're in. And of course, 13 was going to be a 10 cap by the time you got to 2013. Right? It's not that way today. I don't know where we are, but there's definitely some wind's been taken out of the sail for everybody. So that's fine. What do I think we're doing now? And what are we advising people? The smartest guys that I've seen, the owner-operators, I'm speaking to you guys in the room, you know, spent 20 years developing very nice portfolios, put wonderful stuff together. The brightest guys that we talked to said, Teague, I want out. We're getting a lot of this. Why? I don't know. First generations, we're tired of it, I think. I think I come back to this is all psychological. Okay, it's financial. Okay, it's economic. All right, there's fundamentals. But I think at the end of the day, it's psychological. We're tired of it. Wasn't any fun going through this last downturn. And the family founders, the senior guys said, we actually could lose it all. We thought everything just went up forever. So we're never going to sell, we're never going to sell. So now they're saying, we're kind of tired, we don't want to do this anymore. Second generation is saying, maybe we want to take some risk off the table, we don't really enjoy it either. So what do? Smart guys would come to me saying, Teague, we like, and actually they came back in the first quarter and said, Teague, we want to sell everything. And for some of those guys, we did it right, we sold everything to the REITs. They're taking their money, they're plowing it back into development. They don't need to do construction loan, they got cash capital to do it. And they can hit the market and they can come back. By the time the world comes back, their assets are coming to market. Where do I think we are today with that? I think we're a little late. We're doing it for a couple of clients, but we got to find some real interesting capital sources out there. It's private equity, it's the kind of guys that haven't really been in the industry, but raise money and want to do it. And again, what are the REITs telling us? Top 25 MSAs, not top 25, top 5 MSAs. Hilton and Marriott product. Teague own a Hampton Inn in Atlanta. That's close. Miami's better, DC's better, LA's better. But we're getting there. You know, and it still fits. And the good news is back in the first quarter, they all had tons of money they had to spend. What happened in the second quarter? They all spent it. What happened in the third quarter? We're being selective. Apple. Anybody heard of Apple? Exactly. Apple was raising $100 million a month first quarter of this year. $100 million a month. You know how much that means they have to spend? What are they raising today? Part of it's the learner situation, part of it's the economy we're in. What's Apple raising today? $20 million a month. You know how much that means they have to spend? $20 million a month. What did Justin Knight, Sam Reynolds tell me this morning? Teague, we're interested in those deals that you just showed to us, but right now we're going to be a little selective. There are others that are higher in our priority list. What's higher? Northeast, West Coast. I bought a bunch in the Southeast. This is what it is. Questions, you guys jump in, ask questions, I'll talk forever. Jump in. What are we selling? We're selling, most of the stuff we've sold a bunch in Atlanta. We probably have 7 or 8 properties in Atlanta. A lot of it is sort of in that economy segments, Motel 6s, Delk Road, Atlanta Airport, a couple suburban lodges. What? Our biggest one is Hotel Midtown, downtown, Peachtree and 10. Anybody know it? It's called Hotel Midtown, Peachtree and 10. CW Capital. Special Service owns it. They've got it, they've taken it back. We're selling for them. John Dewberry's the partner. Not my best friend. Not get a Christmas card. Who's building? Anybody building anything today? Oh yeah. What are you building, Paul? Okay. Who's lending today? Anybody lending today? On new construction? Yeah. What kind of new construction loans are out there? Tim?
SBA 504.
Yeah, for new construction. Yeah. Will they loan on all brands?
Well, we don't discriminate on brands. Obviously, the top brands are preferred.
Yeah.
You know, in our segment, it's typically top out at the Hampton Inn or the Courtyard product.
You guys lending?
What SBA only, 7A or 504.
Yeah. I think most of our, Maryland, most of our SBA stuff is 7A, right? Yeah, most of our stuff is 7A. It's kind of 2 million below, but it's real fast. What's the 504 max limits? 5 million plus? So could I go to 10 million plus?
The total project would be as high as 13, because we can throw 5, and then the bank's doing 6.5, 7.
Anybody doing a $10 million, $13 million SBA loan today? Yeah, I didn't think so. Raj, what are you guys doing? Buying, building, selling, refinancing?
Hold it.
Holding? Why? No other choice?
No other choice.
Yeah, no other choice. It's kind of hard where we are. Yeah. I mean, my advice, there's a lot of guys renegotiating. I know Dana doesn't want to hear this. A lot of guys renegotiating their debt today. A lot of wholesalers out there, Wall Street guys that are going in and just buying all packages of notes. And then they're like Teague, who's the, he's an investor. He doesn't have regulations. He doesn't have anything. He's an investor. He's trying to make a deal. The good news is, I don't know, all the stuff that was bought the past year was bought at sort of 60 cents on the dollar. The bad news is the stuff that's being bought today is at 75, 80 cents on the dollar. When a guy buys at 50 cents on the dollar, there's room for him to work with you on your loan. Sure, pay me off 70 cents, let's call it a day. Move on, we'll both make a profit. Let's work. Auction.com, anybody heard of it? Anybody bought anything through auction.com? Anybody bought half of the assets they're selling in the state of Georgia through auction.com? What do you find with auction.com, Eric?
What?
What do you find in the realities of auction.com?
The reality of auction.com?
Oh, yeah.
Everybody else stop bidding, just let me bid. And I'll turn them all around back to you and you can sell them. Auction.com is interesting. Some good deals out there if you've got the money.
And how do you go get a loan? You call Fidelity Bank?
No loan. No loan.
No loan.
Grandparents is money.
One his grandparents. Yeah. Difference at auction.com and buying heck anywhere else. You're buying a note, you're buying real estate.
Well,
Most of what you're doing is, remember, you're buying a note. There's a difference between buying notes and buying real estate. Who wants to buy notes today? Maybe I'm talking to the wrong crowd. There's a chance. Teams buy notes. You want to buy a difference in buying notes, and this is one of the problems. I should ask some of the brokers in here, Helen, what she's seeing with some of the values of lower assets because of the note purchases. People buy notes and they come back and they say, hey, I bought that for $1 million. It's 50 cents, fantastic. And they tell all their buddies. So now all their friends want to call us and say, well, my friend bought that, we want to buy one for $1 million. You know, you got to remember, my point is, you're not buying the note. You're not buying the real estate, you're buying the note. Harry, how many guys that buy the note show up at the hotel the next day and go, I own this? Anybody walk into their hotel and say, I'm the new owner? No, you're not. My point is, you got legal fees. What are legal fees, Harry? You got legal fees. You got to know what you're doing. You got to have risk to come in and get the asset. If you're a nice guy like Harry is, I'm sure he'll work with you. Hey, let's pay us off. I'll make a profit. You make a profit. We'll call this thing a day. That's all we're trying. But there's a difference between buying notes and buying real estate. Know that. And I can't tell you what the difference is in value spread, but it's pretty significant because of risk. You can buy the note, and the guy shuts the doors and walks off and leaves you holding the bag, and now you got grandfather clauses, and you got to build sprinkler systems that you didn't anticipate, and et cetera. Right? It's not that. How easy is it to go get a personal guarantee? Yeah. Easier said than done. Questions?
If there's no questions right now, we can throw the panel if you want. Teague? Oh, there's one. Let's get through the question.
You said a lot of yours were lower end economy, and I represent 7 banks. And the banks are just now getting around to be rational on values,
Being rational about their valuation, how they got it booked. And they've owned that hotel, typically an exterior, older property, run down, and it's been on that bank's books for a year because they couldn't afford to write it off. Now they're having to write that off. Those comps are about to hit the market where these appraisers are going to start using those as comps. And I just feel like it's going to get worse, especially on the older exterior, interstate, walk-up business properties. Is that fair? Are you seeing that?
Yeah. Well, you're right. Maybe I'll ask an appraiser. Rob?
Well, yeah, it depends on the sale and the nature of the sale, what, whether it looks like a market transaction or not. But yeah, I mean, the market is the market, and if you get a bunch of lower sales in, it does affect how we have to look at things sometimes.
But they're just starting to hit.
Right.
The banks have held it for a year. They thought 11 was going to be better, that it couldn't be worth 10 cents on the dollar, and now they're selling them for 10 cents on the dollar.
Right.
All cash, because that's the only buyer.
Right. Yeah, we said, sorry, if you want to.
No, go ahead, Teague.
We said in general, it was a blanket statement, sort of in January of 09, the beginning of 09. I mean, heck, in September of 08, we said to everybody, you just lost 40% of your value. And nobody believed it. No, we haven't. This is real estate. That doesn't happen. I mean, big, brilliant corporate clients that we have, Archon, Hospitality, have I heard of? Goldman Sachs. They own 350 limited service hotels. Feel like we valued every one of them, didn't we, John? We told them, you're off in September of 08. September of 08 is when the crash happened. We said, guys, you're off 40%. They just bought equity ins from Howard Silver. We gave our number. I promise we were probably half of what they had just paid for the hotels. And their quote to us, again, Wall Street, big, brilliant people, their quote to us was, no, we're buyers at those numbers, not sellers. Great, you just bought them. Don't worry, Teague. Well, what do you recommend? Guys, today is better than tomorrow. Today is better than tomorrow. I can't see what's actually happening on the horizon, but today is better than tomorrow. What did they say? No, this will all be over by January of 09.
Right.
So I'll be over by January. No wonder you guys just bought those for 120% of value. So they're coming back to us today, exact same assets. We're lower than today than we were then. Am I right?
a lot lower.
A lot lower. How much lower?
20%.
20% lower today than we were in January of 09, September of 08. Why? One reality setting in. I mean, the world is better today than it was then. We just didn't know it. So a lot, again, the psychology. It's when are things picking up? When do we realize what's exactly happening? But to your point, sir, there's more and more coming in the market. There's more and more. The reason why we're selling twice as many hotels as we did last year and 4 times as many as we sold the year before is because there's more hotels in the market. Everybody's selling. Everybody said, we're tired of this. We're not going to hang on anymore. We're tired of selling. Fortunately, maybe they've gotten the message, they've written them down one year, they wrote them down next year, they're finally at a point they actually can sell it. We're not seeing 10 cents on the dollar, but 50 cents on the dollar, they can sell it. That's how we're getting out of this. The delay and pray kind of worked a little bit, but now we're going to double dip, and that's starting to have a problem, and we actually think that's going to push more assets to market. So, what would I do? I don't know. My advice, I think, right now, if I were a seller, timing was a question earlier, I think January is the time I'd be selling. Spring is always a great time. I mean, everybody's happy, we're tired of winter, we come out, let's go buy some stuff. Let's sell some stuff. Yes, question?
Question, you're saying a double dip's probably going to happen. Let's say it does,
I think it already has. Go.
okay?
So
Nobody's
question.
buying. The REITs aren't buying,
Right.
cash is starting to run low, so what's gonna happen to the assets? Because people are gonna have to sell because of the double dip. And they're gonna like where it's going. So where do you think it's headed?
What
As far as
values of hotels are headed?
Right.
I mean, I think right now values are lower today than they certainly were at the beginning of this year. The question is how long this quote recession happens. I can't tell you what's going to happen in Europe. I can't tell you if that's totally real or they're going to figure it out. But we're all connected. It's all affecting everything. I think short-term values are definitely down because there's not as much capital out there on the market. But, you know, Wall Street works in magical ways. They flip a switch and they turn on and off billions of dollars. And at Main Street, we're not quite that fast. We're about 6 months behind. And my hope is that Wall Street turns the switch back on by the time we catch up. So that we won't actually notice everything. But the more assets come to market, more people have choices. I'm not going to buy this one, I'm going to wait and buy that one. And eventually we're gonna pass and we'll come through this and everything's gonna be going up. I think fundamentally things are gonna be fine. We just got another little blip we gotta go through. Questions? Russ, am I done? I think I'm done. Last
I wish
question.
you weren't, really, it's been fantastic. We're just gonna throw that panel, and Teague will be around with a couple drinks, I'm sure. Please ask him any questions. He looks like he's ready for a couple. Thank you very much, Teague. Let's give him a round. Thank you, everybody, for your patience. I think it's been a great afternoon.